Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we're here on Friday with a Forex daily market analysis for you, and we are also here at the weekend and also at the month end. So yes, can you believe it or not, next week when we come back, we're going to be talking about December. So, alright, let's move on to take care of some accounting real quick, and we're going to show you the disclaimer. Just to remind you that this webinar is for information purposes only. So with that being said, we're going to jump to our live screen, and let's see, here we are. We are streaming on Twitch. That's great. Okay, here we are on the www.forex-trading-unlocked.com website, and we are already pulled up the workstation page from the menu. And let's see, we do have some numbers on December 1st that will mean a little something. That's going to be German retail sales. So that might be something to watch, especially because we've had some numbers that came out this week for Germany and the EU that were actually very good. And for some reason, it didn't seem to get much of a reaction out of the currency very much at all in the beginning of the day. And then we have on December 2nd, we do have a couple of decent economic numbers that'll be popping up for a lot of currency crosses. So that being said, we have the chart that's up here right now. We have the Euro US dollar. As you can see, the Euro has been having a nice little rally going on that really just started actually about an hour ago. So newer move lows were made on the Euro US dollar daily chart, as you can see. So we have probed new lows, and but not by very much. Now the range today, if you look at it, we have the low of $1.98, and let's see, $1.98.12, and a high of $1.10. 20 or $1.09.81 rather, and $1.10.28. So that is what, that's 19. Yeah, that's not too much of a range yet. That's just inside a $0.50 range. Now the interesting thing to do would be to see if we have a reaction towards the highs. We only have a shortened session in the U.S. markets today, so it will be interesting to see if this rally is done for the day or if we're still going to get another surge going into the U.S. market equity closes. So let's see, we have our horizontal ray, so we'll key off of today's low, obviously. And if the market was to turn around there today and take out those lows, well, that would be a pretty bearish sign, I would say, in anybody's book. So there is a little action going on here in the Euro US dollar. Let's take a look what's going on in the pound dollar trade. Pound dollar has been in a kind of a lackluster sideways trade now for quite some time, but looks like it's trying to gain a little bit of speed to the upside. But if you look at these ranges here for the past few weeks, it's been very tight in the pound dollar, and they're wedging. So right now it's positive, and looks like they want to make a little run for those highs, but we're going to still go with this longer term high that was back here. So only a breach of this would get us on the rally train. I mean, the market is in a bullish posture for sure, even though it's been going sideways for a month and a half. But it hasn't been going down. Now we have, let's see, we've off of this high right here, we did have this higher move low, and then we had this lower move high and this higher move low. So this is where we are in this indecision sideways trade right now, with a bias towards the bullish side. Now, does that mean the market's not going to turn and all of a sudden have a nice correction lower? Absolutely not. So here's what we're going to do. We're going to kind of have a little support line off of our lows. So that should be keeping our upward trend intact. A failure from here, that would be our signal, and especially a failure from this low right here. Okay, so that would be $1.2771 would be the downside breakout level, and then to the upside we have $1.30.08. So that's the pound US dollar. Now let's see what's going on in the US dollar Swiss, because this was playing with parity yesterday and it was firmer this morning. Let's see if it's coming off the highs from earlier. Oh, it has pretty nicely actually. We are now back below parity. So we're going to use this horizontal, we got to move this over. Okay, there we go. All right, sorry about that. Had to move the chart to get the line in. All right, so we have just above parity. Parity 22 would be the high. Now look at this, folks. We made a higher move high. We've been rallying for the past 2 weeks. However, we didn't take out this high right here. So we did fall short of that. So I would say that, well, obviously it's a lower move high so far. So we're going to have to see how things go and shape up on Sunday and stuff like that. Today, given that the fact that the market has pulled back so much and now it's below parity, that's a good indication that this market has pretty much exhausted the bullish momentum to the upside. Now, does that mean that the market's not going to go up on Sunday night and Monday and Tuesday and the next week? Absolutely not. But right now, it looks like it's setting up to have a short-term little pause. Like, it seems like whenever the U.S. dollar Swiss touches this parity level, it runs out of gas and gets turned away. So the dollar strength that's in the market seems to, no matter what, at least with this currency, it's pretty much, it hits a wall, and then after that it falls back. So that's the US dollar Swiss. Let's take a look now over at the US dollar JPY, because this one was looking for a breakout to the upside this week, and it definitely did, as you can see. Now, yesterday's trading, because of the holiday, was very lackluster, but today, even the same, probably because by the time Japan had opened and closed, we were closed. So for all intents and purposes, I think their Friday just started a lot earlier because of that, and that's probably why you have this tight range. Now, it did make a higher move high today, but as you can see, this market is a dead, quiet trade. So not much more of a range than yesterday. Obviously, Wednesday, there was that nice little rally that took out this high to begin with and settled above that, giving us a nice bullish indication that this U.S. dollar yen is very strong and wants to continue this rally. However, this is another thing, too, is that as we pull into this little region here, you have to key out the dollar index and see if we start to get a little correction going on there to start the month of December. Now, November, the dollar index has seen strength and has definitely aided this trend for the U.S. dollar JPY. So the question is, will dollar strength maintain, or will dollar strength start to wane? So here we have obviously our highs are what we're bucking up against, and we're going to put in a trend line here to kind of give us a base of support. So even if the market corrects here, it's not necessarily that it's going to enter a bearish phase. It would just be a corrective phase. So we could see another break like this. For instance, here we came off this low, we made a higher move high, we made a higher move low, we made a higher move high now, and we were hovering right on those highs now. After that, to correct back for the next week or so and go sideways even just into this area here would not be outside of the realm of possibility for the US dollar yen. So let's take a look at the DXY real quick. The dollar index has definitely shown strength over the past few weeks. Except for having a little slide 3 weeks ago. It's been trying to lift the dollar against most of the currency crosses for the past month, and now we're coming to month end. So definitely you've seen a nice little profit-taking correction in the dollar index, because in October it went straight downhill from the 1st all the way down into this little area here, and then it bottomed out on the 1st of November, and then here we go. We've started this rally over the past month. Now we're coming to month end. The question is, as we're under these highs, are we going to maintain them and make another run for higher levels and push these other currency crosses down versus the dollar? Or are we going to start to turn around as we end the year? Now remember, you have a lot of balancing of companies going on over the next 2 weeks. Everything from banks and financial institutions to multinational corporations that deal with trading around the world. So that's going to have an impact on the currency markets as well. All right, let's go back to our charts and look at the AUDUSD to see what's going on in that little currency cross. So we have had holiday markets, and here we go. The Australian dollar, US dollar is continuing to slide against the dollar, giving strength and credence to a strong US dollar. But this is one of your lesser crosses, and I think this still is more of a resolute trade that is being driven pretty much by what's been going on with the trade war talks over the past month, which has been somewhat successful apparently to some degree, but not really truly executing too much yet. But we'll see what happens. We're coming into the holiday season in December, and there might be a little easing on the tensions, I would think, as we try and finish out this year. So for the Australian dollar, US dollar right now, no matter what, we have started to make newer move lows. It's hammering them as we look at this chart right now. As you can see, this is not looking too pretty. Now, it's also quiet. You can see it's not jittering around. There's not much price action going on. Remember, the U.S. markets are closing at noon, so it's going to be a different type of trade today. It's a holiday trade. There's not much there. If you're not in it right now, you should just be looking at it and taking a little snapshot to see what's going to probably be setting up for next week. And stay away today. All right, let's see. Okay, let's look at the New Zealand dollar. This is another currency in that trade zone over in Asia, and it's a little weaker as well against the dollar, but not very much. Now, if you look at this one, look at this is a nightmare of a trade. For the past week and a half, it's been trading just here below this 64.37 and above this 63.98. Just bobbling around in that tight little range trade. So range traders have definitely had a really, really good run of the New Zealand dollar, US dollar, I would think, over the past obviously 2 weeks. But now, are we going to get a breakout now that we're going to start the last month of the last quarter of the year and see if the dollar index is going to start to spark a move? If it does, then we'll see how this what kind of a trade manifests. Right now, I would say it's sideways, it's going nowhere, and it doesn't have any real indication of what it really wants to do. So I'd be very cautious trading the New Zealand dollar, US dollar for the next week or pretty much week, I would say, at least, until you get a confirmation of a move. So let's go back to our euro, US dollar for another look. So we've looked at all these other currencies. We can see that dollar strength is obviously eking its way into the market still. However, not with this one. So this one can be just a corrective bounce. Remember, it's in a bear market, has been since the middle of October, and it has done another swing low. Remember, here we had this high, we had a higher move low, lower move high, lower move low, lower move high, and now we have just completed a lower move low today, and we've had a nice positive bounce off of this. So short term, could we see a nice little correction back up to this 110.5, trying to pressure 111 even? Absolutely. Look at how much trading has occurred over the past 2 months just in that area or right around those levels. So right now we're kind of bobbling on that strong support area, and if we get another bounce, then most likely we're going to see at least some sort of challenge up and towards this near this $1.11 area here. Is there much more to the upside of that? Probably not if the dollar index is still rallying and being strong against the broad market of currencies, but there's always a little divergence that occurs between even lesser and different currency crosses versus dollar, even though the momentum may be very strong one way. Just to key off that low from today, around 109.82. For if you're long, I would definitely want to not be long against that, below that rather. So if you're looking for a short, probably if we get back to those lows and take them out, there's a really good probable chance that we'll press the lows down towards that 109.5. Maybe 109.25. Now remember, these moves are not that substantial, so it's not like you're looking for a lot of bang for your buck. So use caution and make sure you have your risk-reward ratios in place, because even if we do have a little follow through to the downside, it may not be worth getting into a trade unless you're already in it. So with that being said, we don't really have any signals for you today to really look at. We'll have to see how the close goes today. But we have the dollar index, and let's end this webinar taking a look at the monthly chart of this. Now in October we were given a sell signal. There was a bearish engulfing line. That's this red line right here. Okay, let's make this in black and white. This way it's easier to see. Okay, so this red bar right there was October. As you can see, we've come back and had a nice retracement to the upside in the dollar index. But that's the question. Is it a retracement, or is it a dip to buy, and is the dollar index going to make a run for new highs as we start to close out the year into the month of December? A rally that would keep on, well, obviously a rally negates the sell signal from October, but this is a monthly chart. So if the October sell signal still is valid, then we're probably going to see a little turn in the dollar index that would start next week. If that occurs and we start to head back towards those lows and we take out even remotely take out the lows that were set in place in October and November. If we take those out, then it's probably all hands are off, all bets are off, and the bears are definitely going to probably have the control of momentum for maybe not just even 2, 3, or 4 months, but maybe upwards of 6, 7 months. So we'll see. It wouldn't be unlikely to see the dollar index trading back down in this 92.5 to 90 cent area. Remember, we have a busy January geopolitically, especially what's going to happen to the dollar. What's it going to do? Not a clue. I don't think anyone can possibly put a nail on that one. So anyhow, with that being said, since we mentioned that Japanese candlestick pattern just now in the dollar index, you can learn all about Japanese candlestick patterns in a book called High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. So through reading that, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. Works in Forex markets, stock markets, futures markets, option markets, and all kinds of examples in the book to guide you through how to use them. So with that being said, thank you very much. You have a good weekend, and next week starts a new month, and the end towards the end of the fourth quarter and even the end of 2019. Can you believe it? We're going to be in the last trading month of the year. Looking forward to a new year. So with that being said, take care, and always check what's going on at www.forex-trading-unlocked.